opinion. What do you think about this? Because see, the truth is, you can't jump level 1, level 2, and see modeling. What we are doing, I'll call this around level 4, even I would say level 6. So which means if you don't know level 1, if you don't know level 2, now, and one other thing is, I know some guys will go online, do corporate finance model, and come back here and come here and you think you know modeling. No, it's far from it. So you've jumped a significant ladder. So you can't go on and learn corporate model when you don't even know the fundamentals, the rudiment, the basic modeling thing, and how it's attached to business. Right. So let me give the floor so that to also hear from you guys. Please, if you like to talk, just unmute your mic and let me allow you to have the floor. So guys, I think do I know a few people that I can call on? My boss, Gafestos. So I think we have one of our boss in the house. Yes, right. See, this man is advanced, but I don't know. So and that's just to tell you the truth. Okay, yes, Mr. Hart.
Okay, let me go, Victor.
Okay, yes,
First of all,
please go ahead. Yes, sir.
Good afternoon, everyone. Yeah.
Afternoon.
Like what Victor said is actually very correct. For me, when I started, I think I trained somewhere, the brand consulting, but I didn't want to mention the name, but I just had to. And we started from like the basics of the basics, right? That was my first stint at financial modeling. Started from Excel, all this, everything on Excel, then started building it up from Excel to how business models operate, from how business models operate to how business is run, how drivers and whatnot, like that, to when we built just a simple statement financial model. At that point, even at that point that we built from scratch, for me, it was still a struggle, to be honest. I was still trying to figure everything around, despite I was already a chartered accountant. So not like I didn't have any understanding of accounting, but it just took some time of, most times I usually watch whenever a lot of Victor's YouTube videos, attended several of his sessions, and some time of me even building models by myself, just picking financials and try to build the models over time, right? So it now made like, I did that over time. Then I now pick a bit of interest in it, and I say, okay, I want to be a certified modeler, and I got my certification as well. And so it has been a journey, and I think I've been around financial model for like close to 4 to 5 years consistently. So it's not like it's so for some people might be struggling, but it's natural. Over time, there will be a learning curve. You keep getting it, the knowledge keeps sticking, right? And it gets better by the day. But it's quite natural. It's just a natural progression. You might not know everything at the same time. Even myself, like last week, I was the person that was having issues with secularity. But during the week, I went to check and I saw that, if you go to Excel, there's one iteration button, toggle, that I didn't click. I went to click it and everything just changed. So over time, you get better by the day. That's the way I say it. Thank you.
Okay, thank you so much. So which means it's normal for you to get lost, right? But over the time, even after how many years, I'm still learning, right? Mr. Festus is like the senior man, so that you know, like senior of the senior. So trust me. Okay, yes, Mr. Hart.
Hi, Victor. Good morning. Good afternoon.
Okay.
It's
Oh,
a
it's
lady.
Mrs. Oh, interesting. I always thought a man. Okay.
It's a
Sorry
lady.
about that. Okay.
Okay.
Please, you have the floor,
So,
ma'am.
this is a very interesting session, I must say. Yes, just like Mr. Festus has pointed out, we would all struggle. I won't lie, me myself too, I struggled in this session. But one thing I've come to learn is daily as we go in our career and in our professional practice, right? Even if we don't get the whole picture of it now, at some point as we progress and as we get the need to use most of all this the knowledge we have gained and we start to apply them, we start to see the relevance, right? It's not that's for me, that's what I have been able to gain and been able to apply. Businesses, especially if you're not in the finance modeling aspect of operation of the business. For me, I'm in the FP&A aspect. However, when we build budgets, it's usually 1 year. We don't do it like in 4 or 5 years like this, or do it month on month, about 60 months and the likes, right? So when I started building our own budget for the company, operational plan and all those stuff, it wasn't like this. So what I'm saying is that as we progress and as we get the need to use this knowledge and to apply this knowledge in our daily um professional career, we get to see the relevance and we get to become better at it. That's just what I have to say. We cannot all be experts at once. So that's it. Thank you.
Thank you so much. Thank you so much. So, which means it's normal for you at the start. You feel a little bit shaky, but trust me, it's a continuous learning. It's a continuous learning. Thank you so much. Please, can we also have additional one person that can help us? Just add a comment to share like your own journey as well. Any one additional person? So don't worry, just keep. That's the truth is just keep learning. Okay, yeah, Tolulekan, yeah, please, you have the floor.
Good morning, everyone.
Good morning.
For me, I would just add that genuinely is a learning curve for me as well. Even though over the years, genuinely, I'd actually done financial modeling. But in corporations, even when you're doing the financial model, you might not be the one to do it from start to finish, right? And, there are some aspects that you might remain rusty in. At one point, I was in FP&A, and all I had to just manage is just the revenue line for an FMCG. And then, yeah, building up a revenue line with different SKUs and all of that is actually very big because it might actually take you months to actually finish some of those things, right? But this is actually given, should I call it, a more robust and in depth into every intricacies of all of those areas, right? And talking about the challenges we might face in this, I know Victor will always say, it's a matter of practice, practice, and practice. I still make some mistakes. And one broad thing about and he always corrects me about it whenever I submit my assignment. And these are the ways we learn because I go over it again and I'm like, okay, yeah, this is just the right way to do it. And another thing about financial modeling is dynamic, right? Because of different business operations, right? Understanding the business also goes a long way. Underlining of that is just the fact that accounting also has its own principles. So merging the accounting principle together with the business operation also makes it very interesting, but it's a way through. But to combine everything that Lillian, Festus, and Victor has said is that if we keep following that roadmap, we would surely get to the end of it. One good thing about myself is I never attended a financial modeling class. It was more of self-taught, but I know I still have a long way to go, right? So I'm just going to say keep pushing and you will keep getting there. That's just what I have to say. Thank you, Victor, for sharing the knowledge with us. Thank you.
Thank you so much. So, the truth is, learning curves are always very difficult. Right? Some of us had to uh, take extract, and that's one thing I usually tell people. You might not have the luxury time someone like me has. I had to sit down with it for almost 7 months, right, doing it. So then was doing the freelancing for one company. So I have the luxury of time to also extract here and there, even though there was no resources. But now that there's resources, I know it can be difficult also merging this together with your day-to-day work, especially if it has nothing to do with this. But it's a sacrifice we just need to pay. Right, it's part of it. So I'm sorry, but if see, the truth is the fact that you are getting lost means you are making progress. Right, and you are aware. So you also have that awareness that yeah, you have this is applicable, this can be done. And it's a way up. You're right. Well done, everyone. Well done. Thank you so much. And the fact that even despite saying this class is for experts, right? You guys still make sure that no, you know what, I'm still going to to get in. So that's a lot of sacrifice, and I must commend you guys for that. And that's one of the reasons I make sure I go through everyone's submissions. That's one thing about me. I'll go through it, leave you a comment. Right, it's only if you submit very late that you will not get comments from me. So well done, everyone, and well done. All right. Now we've been able to build out our tax. Yes, I know some people try to do some interesting magic in computing their tax. All right, but well done, well done. Though, as I said, the proper. So if you are building a proper operating model, right, in the proper modeling space, what we usually do, the way we have this tax like this, we'll send this model, we'll send it to the tax guys. So they will now be the one to use this. So they would be the one to also use this to do a proper tax computation. Yes, though at times we also do it ourselves, so where we incorporate we factor in the normal operating loss if the business will be uh, incurring some capital expenditure and it's very huge. So that means we need to also compute the capital allowance. But because of time and I don't want to really complicate things, so let's let's leave that out for now. Yeah, right. I know some people might be interested in that, but don't let us do that. Okay, so someone is asking, the capital structure ratio was used as dividend payouts ratio. Was that deliberate? Yeah, the capital structure. Let me check. Let me check. Someone is cooking something for us. Is that what I use? No, now we can't use capital structure for dividend payout ratios. We created an input for it under our funding in our input structure, in our input data. Yeah, so there's dividend payout ratios. Okay. Okay. I was shocked. So maybe check your own. Right. So basically what we've done is you link out your monthly data and then this is just some kind of so I know some of you use offset. So offset is good, but at least based on where me I'm working at, um, not everyone uses Microsoft Office 365 or not everyone uses desktop Excel. So some clients use. So I'm sure if you've worked for a client and you send a model to them, I do remember after I did like few models I sent to clients. Then they just reach out and said some functions are not working. The model is showing error throughout. Then I realized they are actually using either Google Sheets or online Excel. So which some function like offsets, some dynamic things don't usually work, and also there are some few limitations to hit. So there are some formula you use if you are dealing with small to Excel, but when it comes to bulky model like this, they always advise that you make sure you use uh, function that can work on any both online and the desktop app. So think this sum function is quite simple. I hope you understand what the sum function is doing, because if you submit it, I'm sure you have this my copy. People that did not submit, I'm sorry. Maybe you get this copy later. So I think you understand what the formula is doing. So instead of using the offset, the sum function can easily do that for us. So those are kind of some simplicity you as a modeler also need to know, right? So not every time you need to use those offsets and things like that. Okay, so the sum of function just help us to get that, and at the end of the period of December, right? You always say so. There are also some period where you might need to create your tax payments flag. So maybe if it's not December, maybe you are trying to fit that based on the normal tax return period. That means you need to create like an input for that and use that to create a flag so that the cumulative is being done based on that period. Or if your business calendar period is not January to December, yeah, for example, my where I am now, um, they don't use January to December. Yes, so it's not January to December, it's not that common here. The financial year is different. Okay, and then we do the tax computation, and to show that okay, so could you please explain the reason why the tax computation is looking back in accounting term? Why it's looking back in accounting term? So for a corporate business, right, it's only VAT that is being paid monthly. And the fact that you are paying VAT monthly is because you are saying you are helping government to collect the tax and you are returning it back to them. But for corporate tax is based annually. Yes, no organization pay tax on monthly basis. So you pay it at the end of your financial year, or I think there's more something we called pro rata basis that we did back then in taxation in school. So which means you need to prorate it based on the period, and you need to do your file return. So file is always paid at the end of the period and not on monthly basis. Yeah, so it's as good as you're also saying dividends. Nobody pays dividends on monthly basis. You pay dividend at the end of your reporting year or at your stated end of the year period. Yeah, so that's how that works. All right, so now if you go to our financial statements, the annual financial statements, so, and one thing that is always a concern for me. So you see this retained earnings that we put here, right? Because it can be so interesting at times and be confusing. So this is what I want us to do. Let's cut it and let's bring it below our balance sheet, because if anyone is looking at this income statement, right, you just need to think about your users. Their highs will definitely be going straight to the last values that they have here, and they might be using the retained earnings as the net profit, right? So I've something I've seen before. So you know what we do? I'll come to this my retained earnings schedule. I will highlight the entire column, the entire row. Highlight the entire row. Just press Ctrl X. So cut it, then come below this our balance check, right? And let's paste it below our. So so just sorry. So click on the row. So for example, I'm clicking on row 63. You can right click and you see this insert cut. You know how to use the shortcut, so that just come under this our balance sheet. And anyone looking at our net profit, at our income statement, just looking at the direct net profit, and that is not dividing their attention. So let's do that. I also want to do the same thing for under our monthly financials as well. So let's cut that and put it under our balance sheet. So that once they are looking, then make sure let's be consistent. I think we are leaving 2 rows before the next header. Yeah. So 2 rows before the next headers. 2 rows before the next headers. 2 rows before the next headers. So that is easy for them to. So anyone looking at profits, our income statement, they know that this is what they are looking at. All right. That makes sense. So should we add our ratios under each of the financial statements, or we should create it separately? What do you guys think? So for example, this annual one, we just insert a row beside it and do our profitability ratio calculation below it, or we should do it in our analysis worksheet. Which do you guys prefer? What do you guys prefer? Should we do it below, or we should do it in a separate worksheet? Okay, in analysis. Okay, so okay, that's good, but in most, yeah, that's fine in the analysis worksheet. Well, as I said, always remember that your model is also a presentation, though in a typical proper corporate, proper our consulting space, Big Four, we usually prefer to have it below the income, the financial report, so that they can see the figures and also see the ratios performance. But either ways, that's good. Now let's just leave that. Now, for operational models, remember what I said. Most times it's used for internal use, is used for internal purposes. Looking at this kind of business, the truth is, this is not good for people that want to invest in the business, right? But we cannot deny the fact that we've actually modeled the reality of it. The next question is, do we need to tweak this or not? Now, most times, internal operational models are not based on evaluating the investment now, especially if it's a startup business and you expect the business to live beyond the first 5 years. So, which means there are some businesses, first 3 years is struggle, and that's the reality of a business. If you take a look at the faces of a business operation, nobody can deny that fact. But we are so wired to where we need to show a profitability. We just need to lie to the investors because they will not want to see the reality of, hey, you know what, this is what is achievable. First 3 years is nothing for us. We should not expect anything. Then we can start picking things up from year 4 and year 5. But investors want to see at least from year 3 or from year 2. And we now need to start doing the tweaking of it. Now let me now ask you, what do you think we need to do? Should we leave this as it is? Believe this is perfect? Or we should start tweaking the assumptions? Let me hear your thoughts, guys. So yeah, at least in a typical practical word, right? What we do is if everything is coming from the client or the assumptions, because by the time you're doing your model report, you state it clearly there. What we do is we are going to leave it like this and send it to the client. Right? Now set up a meeting with the clients and we now have the discussion around it. So the client now feels that, oh, you know what? If we go to the inputs, we are saying we are going to sell this particular unit. Where's our revenue? Assumptions. Okay, yeah. So we're saying we're going to sell 5,000 units and say, oh, no. So maybe that's too small considering the first 6 months. So maybe during that 6 months, we might have started our marketing, right? Also have like a pre-order. So I'm just telling you how this kind of work. So we're going to have like a pre-order. People would have started doing that and some things here and there and there. So you know what? Maybe we could actually sell more than this. That's the next thing. So for typical operational model, at the start, the focus is not investment viability. And that's one of the reasons I said most times, if the investment viability is a must, then what we do is we usually extend it to 10 years. And we state clearly that, you know what, this is a startup business. And the reality of it is the first 3 years will maintain a negative stand. And as such, at the long run, this is what it's going to look like. But if they stick with 5 years, only the 5 years, don't stretch it beyond that. Yes, that's fine as well. Okay, so someone is saying we should build scenarios should be considered. Okay, that's a very good one. All right, so what should we do today? What should we do today? Should we do scenario today? Should we do scenario today? Okay, all right, so that's good. So let's go through this. Let's go straight to our scenario. Let's go straight to our scenario. Yes, so at least you guys have suggested scenario. So let's go straight to our scenario worksheet. Scenario worksheet, scenario worksheet. And here, so on the scenario worksheet, we don't need all this here. So just delete all this here up here. So delete all this here in our scenario. Delete all this here. Then from row, I think that should be cell L9. Right, okay, no, cell L8. Let's call this 1. So type 1 there and format this 1 to show as case 1. Format it to show as case 1. Just update one of the one I have here. So format it to show as case 1. Type 1 and format it to show as case 1. Yes, dealing with our expert in the house. Type or instead of type 1, just type equal to the previous period plus 1. Yes, the previous period plus 1. Then format it to show as case 1. So case 1, so previous period plus 1. And let's assume we are going to have like 10 cases. So let's create 10. Let's have 10 cases. So let's have 10 cases. So let's have 10 cases. Uh, 10 cases. In fact, this case, or should we put it under? Okay, I think that's fine. Then maybe below it. So we just put scenario 1 and up to scenario 10. So this is more like we give them room to be able to type like a text for the description. So you can also wrap this cell. So you can wrap the text, make it bigger a little bit. And for the case 1, I can call this base case with management assumptions. Okay. So make it central. All right. So maybe just below it, just draw like a thick border. Just draw like a thick border below it. So if you like to use color, you can also use color. So under case 1, I can also put like, so just trying to make it professional. You can be creative with your own. Right, if you want to put in a color, that's fine as well. Okay. Maybe this, I can put maybe a border. If the font is too big, I can reduce it to 8. Yes. So case 1. So remember, type 1. Do the same thing across. Then for the case 1, let's type that as our management case. So you can expand this cell so that it's all match with the way we have this case 1. Okay, then we're going to now have a scenario called override. So we're going to have a scenario called override. So we are actually building a mega scenario. Yes. So most times by the time they are done with the model, so maybe if they want to use it for investment decision, is it so they have a scenario that they would have created for those to use for that, right? And you can copy the output and use it for anything they want. If they are trying to also get a debt and things like that, so this just make it easy for them to do that. So we call it mega scenario. Mega scenario. Okay. So mega, call it mega scenario. Right. Okay, let me allow you to do your typing. Okay, I think we should be done now. Right, I think we should be done. Okay, I think we should be done. So most times for cases where we are using mega scenario, so what we usually do is you always have like multiple scenario of inflation that can be used, right? Then you have more like a switch that will do the selection. Do we want to go through that? I think less. So the whole objective is they will be able to operate the model from this scenario. That's always the whole objective. But let's start with our revenue. Let's start with revenue. So I'll put that under my column C. Under my column C. Okay. Then here, I can just go to my input and copy my product name. So copy my product name so that's we'll just type equal to and link it to that same input. So we don't need to remember we can always change the product name from one place. Okay. So under column F, let's call this mode. So this is model data. So which is what we'll be using the model. Then I'll copy. So just copy that value, the price, the input price, copy it and put it under case 1. So just make it central. I'll copy it across. Copy it across so you can delete the one for other cases. To also copy the input format under our override. Put under our override. Okay, then now let's use our formula. Let's use our formula. So we are going to have more like a master. So let's call this our master. Or let's call this scenario selection. So scenario selection. So this will become our scenario selection. Now, there are cases. So if it's an internal model, we can use combo box. right? Or if you prefer to use more like a drop-down option. So if you are considering your client might be using it offline and all those things, so it's always good to just use your drop-down option. Okay, so let's create a data validation here. So data validation, I believe you should know how to create data validation. So go to your data, and under your data, you see the data validation. So let's create a data validation, select your list, and the source should be, so I like all our case 1 to case 10. And click on OK. So that you have that your case 1, and select your case 1. And let's also format it to show that case. Okay. Yep. Maybe I can make this one like a unique separate color so that they will know that this is the scenario selection. Okay. So let it look like this. And from the drop down option here, it's easy for them to select the case they want. So this case 1, make sure you format it. So it's your data validation. Highlight the case 1 to case 10. Then format it to show the case in front of it. Okay. So once you've done that, okay, let me allow you to do that. Please, if you have any question, ask. Well, I think this should be straightforward. All right, so for this one, so below this our scenario selection. So let's use this to bring out the scenario name. So equal to just use index, then highlight all this our scenario name, scenario title. Okay, comma. I think you should put 2 comma, then the column, select the scenario selection and press enter. And you can centralize this. So that any case being selected here, you just pop out the name as well below it. So I can make this more like maybe a red font. Okay, so that's easy to read. Okay. So working on our scenario today. Hope we are recording this session. Okay, yeah. So last week you forgot to record. So some of you sent your model and your model was having circular reference. Please check your model. I'm not sure why you're having circular reference. Right? Yeah. Because it's supposed not to have any circular reference in your model. So please check. Model ought not to have circular reference. Okay, so I'm just using style to wait for you guys. I know I can be too fast at times. Okay, so I believe we can move to the next one. Right? So index formula, you guys should know how to use index by now. So index, let me zoom out. So index, the first thing is requesting for is the output, right? So I like all the scenario title that we expect them to type here. Okay, then put a comma, first comma, put the second comma for the row because it's based on column. Then the column number is where we have that our scenario selection. Yeah, so index, I like the scenario name, right? Where we expect them to put the title of the scenario. Okay. Then add 2 commas because this is column based, not row. But even if we put it on that row, it will still work. But I think it's always good you put it on that column. To change your scenario selection to be sure that it is working perfectly. All right. Then here, also use the same thing, equal to index. Then highlight everything from our case 1 down to case 10. Even though there's nothing there, then put additional 2 comma and select your case scenario. So you can log that case selection so that we can always copy the formula down when we need it. Okay. Can I click on cell L13? Cell L13, just add coded value. You can see the inputs. Right, so maybe if you want to put a border across it, put that your index, and the column number is that cell where we have our case selection. Okay, so once you are done with so under the price, maybe let's put a column, a row, and let's call this price. So they know that this is price. Then here, I think the second one we can also our cost of our price cost, our product cost. So our products costs, or let's just call it cost of sales. So okay, instead of calling it revenue, let's just call this operations. Yes, operations. Then we can have our price. Maybe we just call this revenue. So under it we can have revenue like that. I think that makes sense. Revenue. So the same thing. I'll just copy the entire row for what I use for the price and use this for the costs. Go to my inputs, go and copy my cost of sales. Paste it here. Let's make it central. Then my quantity, which is the next. Okay, no. So I think we have. Okay, so we have capacity. So capacity. You can still copy the same. Then my capacity for each of them. I'll bring it here. Paste it as value. Then the last one will be our quantity. So the quantity. So forecast base quantity or forecast quantity. Then base. So these are forecast units. forecast units, then my capacity. Yes, so we have it like this. I can remove the 2 decimal for this guy. I don't need it. Okay. So under operation, we have our revenue, which are price. In fact, should we call it revenue or let's call it price? So price, then product cost. So product cost, I think that would make sense. Then capacity, quantity forecast, quantity forecast quantity, and okay, yeah, base. So base months. Can you use base months or anything? But let's leave that. Okay. So let's see what this look like. Can see what this look like. Then below it, we can have our, let's call this line. So under here, let's call this one line item sensitized. Okay. So here you can have our revenue. Here you can have our cost of sales. And here we can have our operating expenses. Operating expenses. So this one will be percent. So this one will be percent. This one will be percent. Because we're just sensitizing the whole line item. Hope I'm not too fast, sha. So what I would do is I'm going to lock. So let me refreeze my cell. Let me refreeze my cell. Then I'll freeze everything so that from case 1 upward is freezed. So that's easy to scroll down and scroll to the side. Yep. So as I said, most times you don't expect someone that does not have a knowledge of modeling or finance to operate an operational model. It's a mega model. Okay. So I'm just giving us time to be able to catch up. I can be fast. All right, so please, immediately you are done, you're on the same page where I am, just click a thumb up so that I'm sure before I continue. All right, so let's fill in the line item sensitized. So this will definitely be in percent. Okay, so format this to be in percent and just put it as 0. And then also use our semi index formula to bring the scenario that we want. Okay, so remember to format this to show in percent. Show in percent. Okay, but for this one, now what we're going to do is in front of our index formula, in front of the index formula, right? Because this will definitely sensitizing the line item. So put 1 plus then the index formula so that it's return it back as 100%. So which means if we want to increase all our revenue across by 10%, that will just turn it to 110% and we can apply that in our calculation. Okay. All right. So now remember what we've done is we've created a scenario. So which means this scenario will be what will be driving our input. Now, before we do that, remember we've created these override options. And what this override option is saying is they might not want to put it under any of the case. That means anything they put inside this cell, we automatically override anything they put under any of the scenario. So which means we need to be able to add a formula here that will help us pick that. Okay, so I'll come back to this. Let me just use the first one here. So this is my index. In front of it, I will now need to use if function. So if the first thing is if is blank. If it's blank, right? I'll select the override, close the brackets, comma. If it is blank, you should use the what? You should use our index formula at the end of the index, comma. If not, you should give us whatsoever thing they type inside that cell and close the bracket and press enter. So which means if I type 5.2 here, what should happen? That should override it. So, oh, no, sorry. I think I've put the formula wrongly. So it should be, to come back in front of my index, it should be if is blank, right? So if this cell is blank, if it's blank, yes, I think I'm correct now. So if it is blank, you should give us the scenario, right? And if not, you should give us, oh, okay, you should give us J14. Thank you. Sorry, Jerry. So, okay, yeah, I think let me edit it from the box. So if then is blank, that is if this current cell is blank, close the brackets, comma, it should give us the index formula. Use that to give us the scenario. If not, it should give us whatever thing we have in that particular cell and press enter. So if I type 5.2 here, so it automatically override it. If I delete it, it's going to do that. So just copy it, paste it down, paste the formula down. So paste the formula down. So that means for this our sensitized line item, you might need to rewrite the formula again and not copy it down. So if is blank, right, this particular cell, close it, comma, should give us this. Then if not, it should give us what is in that override cell. Okay. I can copy that, copy it down, copy it down. So if I type 2% here, oh, okay, so it's still going to, so we still need to do, so 1 plus, also 1 plus whatsoever thing we have in the override cell. Okay, so this is what we call mega scenario. In fact, there's one approach which they might not need to fill in all the line item from A to Z, right? It's only the scenario they want to change. They just put in particular value there, and but don't let us go through that, so that we don't scatter the class. Okay, it's quite straightforward, right? So which means this scenario will be what will be controlling some of the inputs now, which means I'll need to come back to my inputs under my product pricing, right? Initially, this was hard coded. What I need to do is I'm going to delete it, also clear the format, and now equal to, I'm going to link it to the scenario, which is the current scenario here. So which means this will become our what? Then I'll put it in our link cell style. I'll put this in our link cell style. I'll do my border back. So this become a link cell, which is coming from what? Which is coming from our scenario, which is coming from our scenario model data. Okay. So I also do the same thing for the cost of sales. I can even copy this. Just copy the format, paste it here, then link it to the scenario. Right. Straightforward. Then our forecast units as well. Link that to our forecast coming from the scenario. And also our production capacity. So it will no longer be inputs. It would be controlled from our scenario. We control from our scenario. So link cell style. Remember to put it in our link cell style. So they will understand that yes, this is where they need to update it and it's no longer an input. All right. All right. So, which other thing? So we can create scenario for as much as any more line item we want. So let me check which other one. I think our working days, our net working capital days. So most times, always make sure that you are creating scenario for what really matter the most. Okay. Now for this our line item sensitized, let's also link that to our monthly financial statement. Should we sensitize it in our financial statement or in the calculation? Let me check. So total revenue. Okay, I think let's do that from our financial monthly financial. So let's go to our monthly financial statements. Monthly financial statements. So under this my input / linked cell, type equal to. So make sure you link that straight to the 100% for revenue. Right? Can centralize it. Just make sure the color kind of look. I can make it a little bit faded. Right? Then the same thing for your cost of sales. And you also link that for our operating expenses. So operating expenses. So this is sensitized. So you can sensitized. So this is the sensitized data. Change the font to something harsh like this too. Okay. So sensitized, then go to month 1, then edit the formula and put multiply by what? The cell that contain the 100%. So make sure you keep the column constant. So enter. So do the same thing for your cost of sales. So multiply by that sensitized 100%. Enter. So you can copy your formula across. Then do the same thing for SG&A. Also multiply by the sensitized percent. You are going to keep the column constant. You can drag that across. Okay. So which means we've integrated everything. We've integrated all the scenario that we've created. Right. So I'm just giving us time to be able to do yours as well. So remember, go to your monthly financial statements, link the sensitized, link it here, right? So each line item, and then you can now multiply that cell, multiply by the percent and copy across. Okay. Just giving us a little time. All right, so are we good to go? Are we good to go? Are we good to go? All right. So that we're sure, let's take a look at it. As I said, so you can add as much line you want to add based on your own uh, judgment, right? So this is networking capital. If you want to create a scenario around networking capital too, as well, as it might affect the cash, right? The cash ability of the business, which I feel will be also good, will be a good option. So in fact, let's do it. So by the time we are creating our viability, we know which option kind of works best. So let's call this our networking capital. So let's create for networking capital. Okay, so I need inventory, receivables, trade payables, accrual, another. I'll just copy that. So I'm just working smart. I put them here. Okay, then go back, copy this value. Then copy that across. Okay, also make provision for my override. And just copy the formula. Copy any one of our formula, put it here for my networking capital, and I can go ahead, change all this from inputs. So change them to link sales type. Just copy this format here and link them straight to my scenario. So they are coming from there. So just link that like this. Okay. So we can also create for the funding. As I said, you're allowed to create as many as you want, but most times it's always good to focus on key assumption that will affect the output, right? So operations, networking capital. So maybe below here we can have, let's have funding. So let's call this our funding. Then under our funding, so let's have our sources of funding. Okay, so sources, or let's call this funding mix. So funding mix, I can copy my equity and debts. All right. So it's also being percent. So let me just copy one of my percent formats here. Okay. So here we are going with 60/40. So I'll just copy both formula like that. Drag this. So drag the one for debts, drag it across. then update my formula. So this one, we just need to remove the 1, where we have the 1 plus, so that's it's showing the exact percent. Okay. And I can now change this from input, then also change it to link sales type. So this is what is controlling this now. So it's also coming from the scenario. Also our funding, our debt term, right? Maybe if the company might want to extend the debt and things like that. So I think we need loan period, grace period, and interest rates. Yes, so this cost of funding. So we have that about these ones here. Okay, then let me copy my loan period, my grace period, and my interest rates, and our scenario, and drag that across. In fact, you know what we should do? Let's drag all the base assumptions. Yes, let's drag it across. It's always good, so that it won't change the scenario and expect one magic to happen. Okay, then use my formula. So I was still creating the override option. Okay, then use my formula to get to the one for percent. So I'll copy this funding part. And do your proper formatting. Okay, then go back to my input, then change all this from what? So change it from what we have from the formats of inputs and make them linked. Make them link cells. And I'm going to link them straight to my what? To my scenario. Okay. Which means this is what is controlling. These are scenarios, what is controlling. So in fact, we can even name it inputs. So maybe inputs underscore scenario, so that it's easy for people to also understand. Right? So you can add as much as you want. I think for what we have here, I think this is fine. This is fine. So now we can start playing with any of our scenario. All right, so please, immediately you are done building your own, just give a thumb up so that I'm sure we are on the same page before we go to the next thing. My time is moving fast. Okay. Are we good? Any question? Any question? Any question? So now, I hope we should be done by now. Let's now deal with scenario 2. So let's call this scenario 2. Let's call it finance. Oh, I just want to call this one scenario, right? Maybe we call it our own. That would be our own expectation, right? So okay, in fact, yes, I still remember too. So also our period, yes, we can also create time around our setup period, our delay period. In fact, let's include that. Let's include that. That should even be the first thing we're supposed to do. So this my operation. I'll just insert a row above it, and then we call this our timing. So let's call this our timing. Yes. Then we just need let's have our setup and our delay period. Yes. I think that's better. So they are all in months. So copy this and put it here. So which is also another scenario then we can use for our scenario. I can go ahead and copy this is my formula for my grace period. Yes, it's also formatted in months. I'll put it here, put it here. Okay, also create that option to be able to override. Okay, so let's include our timing, and then I can go back to my inputs and make them linked straight to our scenario, put them in the link cell style. Yes. So we include that in our scenario. Then maybe scenario 2. So let's just call this. So scenario 2, let's call this maybe analyst expectation. Analyst expectation or analyst, or maybe we should call it analyst view. Or which one should we call it? Analyst expectation. I think analyst expectation is fine. Analyst expectation. Let's call it analyst expectation. And we can now play with our case 2. But let me allow you to finish your own. Okay, so I think we should be done with our scenario now. So please confirm if you can start to make few updates. Just type yes in the chat box. So if I didn't get much yes, that means I need to wait for you guys so that we can update the case 2 together and look at what the impact will be on our output. So as I said, that some people prefer to use combo box so that what the advantage that will give us is we'll be able to move that into any of the worksheets, right? And we don't need to be coming back to input scenario to do the changes. I think we should use combo box. What do you guys think? Should we use combo box? Should we use combo box, or we should leave it like this? Should we use combo box, or we should leave it like this? Okay, second person is saying combo box. Should we use combo box? Should we use? Okay, but let's leave that. I think maybe I will leave that to you as your assignment. Yes. Yes. So do that. That will become part of your own assignment against next session. Create a combo box for your own. Oh, we don't have time. We're almost exhausting our time. Just want us to do this case too. Okay. All right. So let's do the case 2. So let's create our case 2. So majorly what I want us to do in the case 2 is to just don't let us use combo box again. Okay. All right. You see life because it's not your assignment. You don't want to use combo box again. So for our forecast quantity, let's go to our forecast quantity. So I feel, let's see. So if we make our forecast quantity to increase. So what is combo box? So it's part of Excel. You can just go online and search for how to use combo box. Okay. Then so for our case 2 under our quantity, so let's increase the quantity from 5,000 to 6,000. So what I'm trying to see is I'm saying if we increase our quantity, right, and also find a way to increase our operating expenses, our marketing and admin expenses, right? So we have advertising and promotion costs. That could be one scenario, right? So as I said, that's just like the concept and how it works. But let's see. Sure. Scenario. So let's change this. Let's change it to. We change this to 7,000. Does it have any impacts? So okay, yeah. So I'll change it to. So case 2 under my forecast quantity. So if you make this 6,000, so let's just add 1,000 to the unit. Then the second product 4,5. Then change my case to case 2. What is the impact? That's a significant impact, by the way. Okay. So what if we say they can even sell more than that? What if this is 7,000? 7,000 and this is 5,500. So 7,000, 5,500. I think that's fine. Okay, good. So change. So for case 2, under case 2, change the forecast quantity for concrete back to 7,000 and the concrete cedar block to 5,500. And we should have I think this should be fine. I'm fine with this. So from year 2, year 4, and year 5. Okay. And in respect to that, we can decide to pull off the advertising. You can decide to also pull the advertising figures, also increase it a little bit. So maybe we change this to, so go to your advertising and promotion and change it to 2005. So change it to 2005. Could have created a scenario around it, but let's just leave that. Okay, so just try to match everything. Might need to be very intense with their marketing. So also establish different contract and we are good. All right. So now for the scenario, let's come back to inside this scenario where we have this analyst expectation. So edit the formula. So edit the formula, right? And let's use a text join. So equal to So let's use a text join. So what I want to show is, so on each worksheet, I want us to see the live scenario, right? I want to be able to see the live scenario. So we need to create something here. So I'm going back to my formula and put a double quotes. So double quotes and type live scenario, then put a space, maybe like a colon, then close my double quote and put my and function so that it's showing like live scenario. But I want that case 2 or case 1 to also show. So let me also still edit it. I believe these are just normal Excel things, so you should be able to do this on your own. And then select the case that I have. Okay. Then put like a space, maybe and again, then to look. Okay, so what I would do is open another quotes, double quotes, and type case. Okay. Case underscore. I just want to join them together. Okay, yes, so I'm almost done. So after the case 2, I need another space. So text join. So this is what I want. By the time they click on scenario 1, case 1, just show live scenario, case 1, business, base case with management expectation. They click case 2, you just show live case, then the current case selected, and what is happening there. So I can put one iPhone here. So I just look like this. And what I can do is on each of the worksheets, so I can rename this to your name manager and call it maybe scenario. So scenario selected. Enter, and I can go on each of the worksheets and just link that to the name range that I created. So on each worksheet, it's easy for them to see the current scenario the model is running on. Can also decide to put, I'm using like a bright color. Okay, so I'll copy and put it on all of the worksheets. So it's easy for them to know the current scenario that is running. So instead of the combo box, right? So most time combo box is always preferred, so that it's easy for them to do the switch. Well, let's use this. So copy it on all of your worksheets. Let it be there so that you understand the current scenario that is running. Also put it on your menu worksheet. Okay. All right. Let me zoom back. So please always remember, once you are done with your model, always make sure you scroll your model back to the top. Let it start from cell A1. Scroll everything to the top. Make sure you zoom it down to 100% before you share with clients. It's always good. So make sure you zoom everything to the same zoom size, 100%. So operation, zoom everything down to 100% and make sure that everything is starting from the top. Right. Make sure everything is starting from the top. Maintain the same zoom size. Okay. Okay. So let's leave it on analyst expectation. Right. If you change it back to 1, make sure you change it back to 1. You go to your financial statements. Make sure that we have almost the same thing we had initially, profit in the last 2 years. I'll go back to input scenario, change it back to case 2, which is management, which is our own analyst expectation. This is what that will give us. Okay. So, all right. I think our time is fast spent. I was hoping we'll be able to do some investment viability, right? But maybe I think we'll post that in the next session. So the next session, what we're going to do is we are going to value this business. So we include valuation, right? DCF valuation, which we also include our WACC computation. Then we do our net present value, also the payback period, and our internal rate of return. I think we should leave that to the next session, right? And hopefully next session we can. Okay, so we still left with our cash flow. Okay, you know what? Let's do the cash flow now. Let's do the cash flow. Yes, please. Let's do the cash flow before we call this a session. I'll show you. Yeah, but the cash flow is just straightforward. It's just us trying to just linking everything to what we have. So here, so I'm going to call this cash inflow. So this cash inflow here, right? And below we're going to have our cash outflow. Cash inflow, cash outflow, right? Then we're going to have our net cash. So our net cash for the period. Net cash for the period. Okay. So under it, then we're now going to have our cash flow. Our cash flow available for debt service. So different cash that we can have. Cash flow available for debt service. Then cash flow available for dividend. Right, like that. But let's get started with our cash inflow. I think the only thing we have under our cash inflow are what? Are only our. So yeah, so also please also keep in mind at times they might want you to include interest income. So if that's needed, always remember to add that. So I think our only here is our sales. Okay. So currency. Right. And I can link the one for monthly. I will link that to our what? I'll link that to our monthly revenue. Link that straight to our monthly revenue. And the one that is yearly, I'll also link that to yearly. Because this is more like what they will be looking at. And not the whole entire financial statement. Okay. So monthly. Link the monthly. You link the annual to the annual. I think that's the only inflow. So total inflow. So there could be, so you also add maybe, so it's always good to make provision, right? So other inflow, and here you can just keep this as input. So in case you want to add any expected inflow, or you might need to create something, just add this. Okay, and then you can sum it together. You can sum that together across. You are given that room. Do it. Okay, you know what? Don't put it in any input. Just leave it blank like that. Yeah. So just leave it blank like that. This is it too. Okay, yeah. Sorry. You guys did not remind me. So we have our sales, other inflow, let's just say other income inflow. Then we have our equity, which is our funding. So equity contribution and debt drawdown. Okay. Guys did not remind you. All right, so I can sum everything up. So including the additional space I'm adding there. So link this to my equity contribution under monthly. You know where that is coming from. I'll go to my cash flow. we have my equity contribution. I will link that. Then my debts. Under my monthly, I'll go to my debts. Under my cash flow, then I also link my my debt inflow under monthly, and I also do the same thing under my yearly. Under my yearly. So modeling is not for the lazy-hearted people. Right? Modeling can be frustrating at times, especially when you are building mega model like this. Okay, so you have that. So you can view it both on annual and monthly, just on the same page. That is what this cash flow is doing for us. Okay, now let's go straight to our outflow. I think we can have this below it. So if you want to put like a color, that's fine. Then for our outflow, let's start with our capex. Start with our capex. So I need my PPE. So here they just want to see how everything play out clearly, right? So we have the PPE. So was our units is 1,000, right? Okay, yeah. Not USD. So I think that should be currency too. Yeah. So our capex, we also do the same thing. Do that same linking. So PP capex come to under my monthly. You see that from your cash flow. So the same thing tangible. So drag that across. Then also for my annual, also link that straight to my annual. Right. So now I have this. So then we have our cost of sales. Cost of sales. I think this is direct method, right? Is this direct or indirect method of cash flow? Guys, what do we call this method? Do we have to type? We have to type of cash flow. Okay, this one is direct. Okay, so this is direct. Okay, good. Thanks. Then also my cost of sales. Also link that to my monthly. Monthly, yeah. Because as I said, most times it's being used to get short-term funding, and banks usually prefer to see their cash flow in this direct method. Okay, so for my cost of sales, just link that straight. Link this to my cost of sales. Also do the same thing on the annual basis. So banks prefer to see it like this, and that's more like also the concept of project finance. They just want to see the true picture like this. In fact, I think there's one other structure that we prefer to use. Yeah, so it's still this same direct, but it will show you the EBITDA. It will show you the operating profits like that. Okay, so cost of sales. Then we have our operating expenses. So link that to my monthly. So operating expenses. Then also on the annual basis, operating expenses. You link that. Then we have our tax expense. Tax expense. Right. That's one of the reasons they make sure that your tax is properly modeled, because it has effect on your cash as well. Okay. Then for the HANA, also do the same thing. So you're just doing here is linking, you keep linking. Tax. Then after that, we now have our changes, our net working capital. Right? So let me check our net working capital. the movement in our net working capital. So we can just put everything together, right? Don't need to be doing. We don't need to be create inventory. Well, you know what? Let's move it like that. So inventory this. So just bring it like that. You have no option because they always want to see each line item. They want to make sure they see each line item. So the same way we've created it in here, let's also bring it here. So I just remove the movements. So we have inventories. We have the inventories. Then we have the trade receivables. So trade receivables. Then we have the trade payables. Okay. Then we have our accrual. So we have our accrual. Okay. So for the inventory, so what we're going to do is for the one that we have in our cash flow, okay, so that means we are going to invert it, right? I think I'm correct. So equal to, for example, if I go to my balance sheet monthly, right? Yeah, so we are going to invert it considering this is not a negative. So equal to, then minus, go to my monthly financials. I hope I'm correct, guys. I can be wrong too, so but let's be sure we are putting it the right way. Enter. So I'm going to invert everything. Okay, just copy it down. Oh, okay, no, sorry. I think I'm starting from the wrong one. Okay, so from the monthly. So inventory, now put minus in front of it. All right. And copy it down. Copy it for all of them. So that I'm sure that I'm correct. Let me look at my inventories, right? So which means I have this inventory in stock. Okay, yes. So these payables. So these payables, I have people that need to pay and I'm yet to pay them. Okay, yes. So we're going to invert it. So do the same thing for the HANA. So equal to minus what we have in my financial statements. Okay, so please, I hope I'm correct. I hope I'm correct. Let's check it together. But there's always a check, sha. So by the time you do this direct method, or you definitely need to get the same thing with what you have in your indirect. So that will also help us to check. Okay. Please, guys, confirm that I'm correct, though. I can also be wrong. But as I said, the check we usually use is you make sure the same thing is the same thing with what we have in this other method. Okay. Then we are now left with our funding. We left out financing. Okay, right. So here we need here we have our interest expense. Okay. So we need our interest expense. Bring the one under annual interest expense. Interest expense. Then the one under monthly. We also need the interest expense under monthly. So interest expense, right? Then we now need our principal repayments. Principal repayments. The one under HANA, I think that's principal repayments. Take that from our cash flow. So let's just bring the dividends to below it. Dividends. below it. Also do the one for monthly principal repayments. Then copy this across. All right, so I will leave a row. Okay, so now we need our net cash flow. Our net cash flow. Okay. Oh, sorry. Let's first do our total cash outflow first. Our total cash outflow. So sum everything up. Our total cash flow. Our total cash flow. Then below it we can have our net cash flow. Our net cash flow. Okay. So our net cash flow equal to just sum my inflow and my what? And my total outflow. Sum that together. Sum that together. Sum it together. All right. So now we now need to check that. Let's compare that to what we have in our monthly, in our cash generated in the period. So if I look at my cash generated in the period, is it the same thing with what I have here? So the answer is no. So what is happening? So look at the net cash flow in the period. The net cash flow in the period. Okay. So they are meant to be the same thing. So I'm having a difference in my own. So what is causing the difference? They ought to be the same thing across. Is it the cash? Is it the working capital we did? So the net cash flow. So let me check. We put, let me see. Is it what we inverted? Oh, okay. Oh, okay. So we are not, okay. We're not meant to invert it. Okay, so please, let's pull back that inversion that we did for our net working capital. I think it's the same thing. Yep. So if you change that back to remove the negative, the inversion we did. Oh, okay. Oh, now I remember. So it's when you are using the other method here. So this should give us the same thing with our cash generate the net cash flow in the period as we have. Yeah, so it's fine. I think it's the other method that you need to invert it. The sales supposed to be a cash sales. And yeah, so and that's why we've included the net working capital. So even if the sales is not cash, or if the sales is cash or not cash, so this net working capital will take care of it. Yeah. Very good observation. Yes. So even so the sales either is cash or no cash. As long as just link it to the sales, then this net working capital will take care of that. So it's only if you are not accounting for the net working capital that you need to focus on only the expected cash sales. But if you consider this net working capital, then don't worry about that. Okay. All right. So you can see now that it's looking interesting. It's looking very, very interesting. Okay. So let's look at our cash flow available for debt service. Let's look for our cash flow available for debt service. We can do that below it, and that will now be our what? So equal to, I think that should be sum of my total inflow. Okay. I know some people don't usually consider the funding contribution, but let's add it. So sum of my total inflow, comma. Then I'm going to alias from my PPE capex, excluding my what? Excluding my, so from my PPE down to my accrued and other liabilities. Close the bracket and press enter, and that will give us our cash flow available for debt service. So sum your total inflow, comma, then sum from your PPE down to your accrued and other liabilities, all our net working capital. Okay, close the bracket, enter, and copy that across. So copy, so do the same thing for your monthly, do the same thing for your monthly. Do the same thing for your monthly. The same thing for your monthly financials. All right. So these are debts. So this is cash available for debt service. This is the cash that we have to meet any financial obligation. And it's from this that we will now need to calculate our, so below it, so we need to calculate our debt capacity. So here we now need to calculate our debt capacity. So let me leave that to the next session. All right, so that don't scatter someone's brain already. Some people are still struggling with this scenario, the mega scenario thing. So do this. The next session we now do our evaluation, and we make sure we try to complete this cash flow headroom, which is more like the most important aspect of it, because this is what they want to use to be able to say that, hey, this is the actual debt that we can take based on the expected cash flow based on this period. Right. Okay. So thank you, everyone. I'm sure it's getting interesting. Okay, so someone has a question. The question running in my head now is the overdraft we have in the financial. Could you just talk about it? Overdraft. No. That's part of the fundamentals of modeling, right? No. And I think I'm sure we cover it. We cover it when we're creating this. Maybe you want to revisit our previous video, right? I think I remember we discussed this. Yeah, we discussed this overdraft. Want to revisit it? So basically, in a typical business operation, right? So when they are operating, so let's say, for example, this is what we have, and let's look at it from our net cash flow. So let's look at it from our net cash flow this period. Now the business is starting here. Okay, but I think this is better. This is better. In fact, we're supposed to add one thing into this cash flow, which is also that overdrafts component. Yes, we're supposed to add our overdraft component here. But what usually happens is by the time we add the overdraft component, it becomes so it's always give rise to what we call circular reference. So then you now need to start doing some of macro. Now what we are doing now is we are going in depth into project finance, because what overdraft is saying is, you see this period. So I come to my monthly. Okay, yeah, this monthly. Now this period, so if you look at the beginning cash, this is the construction period. Then we add this additional cash to run the business operations, right? So which means you can see now that from month 8 down to month 21, it is the cash that we have from this reserve, right? From the amount that we raised, that the business kept using, because they are not generating enough cash to meet up their operating expenses. You get now, which means by the time we get to month 22, they are still generating a negative cash. Now what that means is, when I think they now start generating positive cash back in month 49. So what that means is, during this period, right, the business we have agreements with the so maybe we have like a bank account, right, with the bank. So banks usually give that credits with for corporate organization, right, where they can withdraw more than amount they have in that account. So what will happen is, what the business will do is, then is this period they need this 28,000 USD to be able to meet up to run the business operation. So what they will do is they will go and withdraw this amount from the bank. So what will now happen is this amount being withdrawn. So if you are doing it properly, this become more like a short-term borrowing, and it will flow back into the business cash, so as to make sure that this ending cash becomes zero. Okay, so basically we are saying, hey, this business needs 27,000 to run the business operation in this period. So what we have assumed is this money has actually been raised through overdraft, which is, we see the same thing as a short-term borrowing, right? The following period, the business cost has accrued one, so it also need additional money of 34 in addition to what they've gotten in the previous month. So which means they will be drawing on the debt, on that overdraft, anytime they don't have cash in that particular period. Now, by the time they now start having positive cash, what will now happen is they will also be paying, they will need to pay back that overdraft because that's a form of loan. Okay, so now I don't want us to go deep dive into that, so that because it's now becoming a project finance thing. Because that overdraft, you will need to feed it back into your cash flow. So the purpose of overdraft is to make sure that there's nothing like, you don't have any negative cash outstanding, because there's nothing like negative cash. So anytime you have a negative cash at the end of the period, you need to go and draw down on your overdraft. Now the overdraft will come in as in form of a debt to net everything off to zero. Right? So if you are as you are drawing, it's just as if you are increasing your debt, and then you now need to start paying back. You also pay back the interest, you pay back the principal, just like the normal debt. So that's the same thing as overdraft. So overdraft is just a short-term borrowing you can't withdraw above your balance limit with the bank, right? And you still treat it as your normal loan. So as I said, the normal way in the project finance, what we do is this period where they have this negative cash, you definitely need to bring in an overdraft as part of an inflow. So it is the overdraft that they will draw on to make sure that this guy becomes zero, and like that over that period. Okay. All right. So let's call it a session here today. Hopefully I should be able to share this my own workbook and the session recording with us. All right. So I thank you everyone. Let's make sure we enjoy the rest of our weekend, and bye for now.